Well, the stock market made a little bit of a bounce back at the end of last week, and that has many wondering, is the stock market crash over? Well, I'm going to show you how to answer that question and talk about the one little thing that is missing. That's all coming up. All right, well, welcome to this week's Market Minutes. As I said at the top, the market made a little bit of a bounce back late this past week. And you may be wondering, is it time to start bargain hunting some of these stocks that are heavily oversold? Is it time to cover shorts? Are we going to see the market turn higher from here? Well, to answer that question, I want to review a simple lesson on how how markets tend to evolve over time. It's a very predictable cycle that stock markets and individual stocks follow, especially when there's been a crash. So what we're going to do is jump into just a black screen here, and I'm going to draw on this. So we've got the market, I'm going to make this yellow. So markets that go down, what they tend to do is step one, break the downward trend line. And then step two, they build a rising bottom. And then step three, they break higher. And if we think about a typical cycle, a market starts at a low, it goes up for a long time, and then it goes down quite quickly relative to how long it took to go up, and then it does that pattern of reversal. And usually at the very end of the downward trend, there's very high volume as investors panic and they all rush for the exit door at once. Now, when all of these investors panic and they sell out of that panic, what it does is it frees the market from future sellers. It's that last group of sellers who are then not going to sell in the future. And that cleanses the market of future sellers. Now, of course, there will always be some sellers. There's always buyers. There's always sellers. But we're talking about how big the group is. And when you get that extreme volume on a strong sell-off day, it's often the final people that have been holding through the whole downward trend, hoping for a turnaround, and then they throw their hands up in futility and give up. All right? So what we're looking for when we're trying to find a bottom is a break of a downward trend line, the build of a rising bottom, and then the break of a rising bottom. That makes a lot more sense when we look at a chart. So this is the chart of the S&P 500, and I'm starting off with the daily interval to begin. So what I'm going to do here is draw some lines, and we'll just recap where we've been. That was the upward trend line. That was broken, and that was when we first started to be concerned that the bull market was over because the upward trend had been broken. And then we built a falling top, and then we broke down from a falling top about 5 weeks ago. And that's when I went bearish on the market because the market was breaking down from a falling top. Now what we want on the buy side is the exact opposite. We want the market to break up from a rising bottom. Now before we look for that, and I'll show you where to look in just a second, what we also need to consider is whether the market is overbought or oversold at any one time. And the way you tell that is you draw the linear trend line across the bottoms. Okay, so that's the upward trend. And if you're far above the line, like if you get up here, that means you're a little overextended. So when you get up there, you're overextended and you pull back. Now in the upward trend on the weekly chart, we were never really that overbought. We were kind of consistently moving higher in a linear trend. But we can't say the same thing about the downside. If we look at this chart again, you will see that we are way below the downward trend line. And when you get way below, like we had maybe 6 weeks ago, you were far below it again, and then you bounce back and come up to it. But that's not a trend reversal. What that is a reversal of emotion. So when stocks go down too far, people sell out of fear. That's irrational selling. What that means is that the pricing that the market has given to stocks is not correct. It's irrational. It's motivated by fear and by emotion. All right? So in the short term, that gets rationalized. There are buyers who will come in because they think they're getting bargains. There are short sellers who have been making good profits as the market went sharply lower that then want to lock in those profits. So they go in and they cover their short positions. And And I think that's what we're seeing. The strength that we saw in the last 2 weeks, the last 2 days of this week, was an emotional reaction to the markets being oversold. People said, you know what, maybe we overdid it a little bit. Maybe we sold things a little too aggressively. And maybe there's some bargains out there, and people started buying those bargains, and of course, shorts cover as well. Now let's jump to the daily chart of the S&P 500. So I'm going to click on the 1Y, click on that, and that gives me a 1-year chart. And then I'm going to click on daily, and that gives me the daily time frame. So I'm going to draw some lines again. Here is the flattest downward trend line, and then we've got a steeper one and a steeper one. And notice that they keep getting steeper. That's because the trend to the downside is not a linear trend, it's actually parabolic. In other words, it's curving down sharper and sharper. And that is, again, a sign of emotion. So anytime you see a trend go parabolic, whether it's to the downside or the upside, it means investors are emotional, and you'll usually get a bounce back rally from that. And that's what you're seeing the last couple of days this week, is this little bounce back here is the start of a bounce back rally from being emotional, from being oversold. Okay, we had that back here as well. The market was oversold. It was far below the trend line. And so the stock prices and the indexes went back up. Same thing here. Oversold, far below the trend line, it came back. And now we're working on the same thing. So my sense is what's most likely happening in the market the last 2 days of last week, and probably going into this week, is we're seeing a little bit of a bounce back as investors get those bargains, what they think are bargains, and the short sellers cover for a profitable trade. The reason I'm not ready to call a bottom in this market is we have not broken a downward trend line, we have not built a rising bottom, we have not broken up from a rising bottom. If the market was just to continue to go up from here, what it would mean is that the shape of the bottom is a V pattern, like that. That very rarely happens. It has happened in history, but it's very rare. And so what I think instead is that we have to go up for a few days, then make a pullback, build a rising bottom, and then try to break the downward trend line from a rising bottom. So if we were to draw that on this chart, it would be, okay, let's use this trend line. We would have to come up for a little bit, pull back, build a rising bottom, and then try breaking that downward trend line. Or come up to the downward trend line, break it, then pull back, and then break higher from a rising bottom. Either way, the market has a lot of work to do. So I don't want people to rush into the market, think that they're snapping up bargains. You can maybe nibble on the very low chance that this is in fact the bottom. But I've learned the hard way that trying to catch a falling knife, trying to be the guy or the girl that buys in at the lows is usually the most expensive way to buy stocks. You're better to wait for the market to build that rising bottom and then start to move higher. All right, so that's the S&P 500, which is the kind of the big index for the US. But let's just dive in a little bit and take a look at the Nasdaq 100 and see how it looks. Very similar. Again, downward trend line. We're far below it. This is the weekly chart. We should come back up to it. If we were to look at the daily version of the Nasdaq 100, click on daily here, you can see again we are far below this trend line. It's a little more linear here, so I don't see as much upside in the short term. And so I think maybe could have one or two more good days to the upside on the Nasdaq before it gets stuck. And the S&P, the broader market, maybe has a little bit more upside until it hits that downward trend line of resistance. Now the small cap sector, IWM is the symbol, it looks quite a bit different just because it didn't have as far to fall. We had this breakout here, which was a fake breakout. We got trapped on that, and then we broke down through support. That was your sell signal. And now we're in this downward trend. Again, we're far below it, but not really far. We could do 1 to 3 weeks of upside move to get to that trend line and then probably get stuck, roll over. And then the question will be, does it make a rising bottom or does it go to new lows? Now, to answer that question, how far down can this market go, which I think is always something to think about. If I take a look at the S&P, and this is where you're going to be blown away a little bit, and I make this a max time frame chart. So I clicked on max. Now I've got a monthly chart going back to 1995. Now, remember I talked about parabolic trends, and when you get a parabolic trend, price usually comes back to the linear trend line. And we saw this during the COVID crash in 2020. If I draw a line across these bottoms, which is the upward trend line that has been in place since the market bottomed in 2009, bottomed in March of 2009, you can see that we ran away parabolically and then we pulled back in 2019. And then we ran away parabolically and then the COVID crash came and we pulled right back to that trend line and bounced off of it. Well, now look how far above that long-term monthly linear trend line the S&P still is. It has still a long way to fall until it can get to that long-term upward trend line. So although in the short term, I think we may see a few up days, maybe even 3 weeks of upward movement, my concern is the big picture here. This market can still fall a long ways until it hits that trend line, taking it down maybe another 20% to where that trend line is. I'm not saying it's for certain by any means, but unless we get that reversal pattern, unless we get that break of a downward trend line from a rising bottom, say it over and over again, that is what we could have happen. All right, let's take a look at the Canadian market, which looks quite a bit different than the US markets because of the emphasis in the Canadian markets on oil stocks. And so you can see the correction is relatively minor compared to what you saw in the S&P. We broke the downward trend line there. We stopped going sideways and now we're coming back a little bit. However, we're at some support. You can see the little bottom that was made there. I think the Canadian market probably bounces back as well. We're still seeing the energy sector fairly strong, and that's propping up the Canadian market. And then the stocks outside of the energy sector, which really have been beat up quite badly, like companies like Shopify, for example, which have been annihilated lately, they may bounce back a little bit from being oversold, people bargain hunting those as well. We can take a look at the TSX Venture for those that like to trade the penny stocks in Canada. And you can see weakness there as well. So generally a stock that is best avoided, but maybe in the short term, you can trade the pullbacks in that. Let's take a look at the US dollar because this is one of the culprits for the weakness. You can see way above that trend line coming into resistance. So the US dollar is due for a pullback. Now, why is the US dollar so strong? Mostly because US bonds have been going down, interest rates have been rising, and there's a direct correlation between the US dollar and rising interest rates. So if I take a look at the chart of rising interest rates, and this is a proxy for it because this is an inverse ETF on the bond market, you can see that it too has gone parabolic. It too is far above the trend line. But notice that red candle there for the week. That means we started the week at high interest rates and we finished a little lower. We closed below the open in terms of where interest rates went. That's something I call a bursting bubble candle. When you have a parabolic trend that goes up and away from the trend line, and then you start to correct backwards, close below your open after hitting a new high, you usually get a move down to support. And so I think that that's likely to happen in interest rates. That'll suck the US dollar back, and that will also give some support to stocks because the whole interest rate inflation concern will sort of be dissipated a little bit. I don't want to overemphasize it though. I'm thinking more short term for that drop in interest rates. I'm thinking more short term for the drop in the US dollar, more short term for a rise in stocks. The bigger picture still is relatively bearish. All right, let's also take a look at some commodities. As I said, oil is a real important thing for the Canadian market because of the emphasis on Canadian oil companies in the Toronto Stock Exchange. And you can see here, the upward trend is intact. We got a little bit ahead of ourselves. We've been going sideways for a couple of months. A little bit of strength last week. We could break out of this, but I think it's still risky. I think it's good to hold Canadian energy stocks, but buying them, chasing them higher, not so sure about that. If you're a short-term trader, you can buy pullbacks in energy stocks. So if you see an oil and gas stock pull back for a week and then break its pullback and start to move up, break up from a rising bottom, perhaps on the 30-minute chart, that's a strategy that I think is working quite well right now. But generally speaking, if you're looking for a stock to buy and hold for the next 2 years, I think you're a little late. The oil and gas market the energy stock market has been going up for a while now. All right, how about gold? So gold has kind of gone the opposite way of oil, and much of the reason is that high US dollar. And you can see that gold got sucked back even more this week. It is now coming into support where it should bounce. It's maybe helpful to take a look at a shorter term daily chart. So I'll make this a 1 year daily chart. And there you can see your downward trend line. You're far below it, and you're coming into this old trading range where there should be support. So I think there's a good chance that gold will bounce back, likely connected to weakness in the US dollar, which we haven't seen yet, but it's due, and we could see it very soon. So if you get some weakness in the US dollar, you may see people bargain hunting on gold prices and then of course gold stocks. So that's something to watch for as well. Now I know many of you are interested in cryptocurrencies. Let's take a quick look at the GBTC, which is the ETF for Bitcoin, or one of the ETFs for Bitcoin. And you can see we broke down through important support this last week. So I've been a little bearish on Bitcoin for a while, and now we've broken that support. Next level support, way down here, $10 on GBTC, which is, I'm not sure what that corresponds to in terms of what Bitcoin would be. If we look at the daily chart, you can see there was a little bit of an attempt at stability at the end of the week. We had a couple of little up days there, and we are oversold. We're far below the trend line. So maybe Bitcoin comes up a little bit, but then I think it's going to roll over and head lower. And so I would not want to be long of these cryptocurrencies until they can start to build some rising bottoms. Right now, the sellers are in control, and you always want to trade with the side of the market that is in control. Well, do you like this analysis? Do you think it's useful? If so, click on the like button. Where do you think the markets are going to go? Love to hear your opinions. Leave a comment, not only on where you think the markets might go, but what sectors will lead the way in the weeks and months ahead. Subscribe to the channel if you haven't already, and most importantly, trade well.